Welcome back. Glad to see you here again. We've already got so many different biases down, but there are always more. This one is called anchoring bias. With anchoring bias, we as investors made our decisions based entirely on irrelevant and unrealistic reference points, and we call them anchors. For example, most of us liked to buy stocks of companies that have fallen quite considerably from their most recent or their all-time highs. Say the recent high of a stock called Asa Power is 1,000 rupees, and its current price is 600 rupees. Now, the recent high, or the 1,000 rupees, became our anchor. We attached our thoughts to that anchor and really believed that at 600 rupees, the stock is available at something like a discount. We were confident that it would rise again to hit the record high of 1,000. The thing is, our recent high anchor may not even be relevant anymore because the base price of the stock might have changed substantially for some reason, rather than by accident, which means the stock would likely never hit those high numbers again. However, because this anchoring bias, we still went ahead and bought the stock at 600. Know what happened next? The stock quickly fell further and further below 600 rupees, and we lost quite a bit of money. Our anchor misguided us. Anchor also affects us while selling. We may get anchored to a specific price, below with which we won't sell. Like in our example here, we might have gotten anchored to the recent high price of 1,000 rupees, and we wouldn't want to sell till the markets pay us the entire 1,000 RS again. But since the stock never reaches 1,000, we don't sell. And in the process, we lose an opportunity to make money. In either case, whether it's buying or selling, due to anchoring bias, we either missed opportunities to make money or we actually lost some. Anchoring happens mostly unconsciously, and the only way by which we could win over anchoring is awareness of what we're doing and why. You can do this now, before you get into the mess we did. You just need to be very careful about the anchor points you are using to evaluate the stocks you might want. Here's a few extra tips to tackle anchoring. Try not to anchor to specific numbers. Look at the stocks from a variety of perspectives, not just price or one or two benchmarks. There are many options, so check each one. Give a thorough consideration to any opinions and ideas that may have contradicted your original thought. They'll help you identify any false anchors or ones that don't make sense. Be true to yourself and check a few times to make sure you aren't making an emotional decision under the influence of an anchoring bias. Be practical. Validate your anchors thoroughly, and then make a well-informed decision. If you remember these, you'll never get caught on an anchor that you didn't even know was there, and smooth sailing will guide you on your way to the market. Watch our next video on Winner's Curse to know how we, as investors, can lose an investment battle in the stock markets and still think that we actually won it. Stay tuned.